What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting method and the trading method that we use can be implemented with any company that's publicly traded in the U.S. stock market. So make sure you hit that like button if you haven't already. Hit that subscribe and notification button as well. That way you are alerted when we release new videos. We do release bonus content from time to time, but the nightly and weekend videos, we focus on identifying triggers and targets for trades ranging from scalps and intraday trades all the way up through long-term swings and leaps as well. So if you want a deeper dive into exactly how we set up our charts, make sure you check out that bonus content on our YouTube page. We've got a couple of videos that dive deeper into that for you, setting the broadening formations, levels of support, resistance, things of that nature. And then if you're not familiar with the STRAT, make sure you check out the link in the description of this video for the free quick reference PDF that we've got. It's just a very simple way to understand price action. All right, so I encourage you to watch the full video today. We do go through the triggers and targets on small time frames all the way up through the large time frames, like we said before. So be sure you'll be glad that you stayed with us. Let's go ahead and check out the agenda for today. First, we'll go ahead and recap the price action from today, Wednesday, March 11th. Before we zoom out like we always do and take a look at the week, month, quarter, and year price action, then we zoom back in to look at what we call the 4-hour markers and the triggers and targets that we set up for Thursday, March 12th. And we'll do a quick review of the triggers and targets for the week, month, quarter, and year as well. All right, so let's just take a look at the charts here, starting with the 5-minute like we always do. This is the way that we are able to take advantage of the proven and repeatable strategy that we talked about at the beginning of this video. And that proven and repeatable strategy is quite simple, right? We look for higher lows at or above the opening print or the first traded price of the day. Look for higher lows at or above opening print and look to get into calls. If we get into calls, we look to the overnight high and previous high day as our targets. Whichever one comes first is the first target. Whichever one comes second is the second target. And the same is the flip to the downside. If we get a lower high at or below opening print, we want to look to get into puts targeting overnight low and previous low a day. All right, so we can see here today we opened up at this 55.49 level. Got the immediate push up, pulled back and got that higher low. We went ahead and entered calls here as soon as we broke above this one to set this as the higher low. Again, it was a soft higher low because it is a 3, well, what we consider a soft higher low. But it's early in the morning. We took our chances, grabbed some calls, and it pushed up. We obviously went through that overnight high right here at 57 flat and pushed right back up to the level that we basically did a double top off yesterday, right? So kept our we had our calls up until this level. Thought we might get that gap close finally, just a small gap here from 57.78 to 58.08, I believe it is. Hope that gap would be closed, but it didn't, right? We pulled back, got another little push up, but essentially a lower high, and we went ahead and sold a majority of our position at this overnight high level, which also triggered the lower low after the lower high, just because we had to recognize yesterday that's essentially where we did a double top again on the 5-minute. So we went ahead and took a majority of our profit. Did leave a runner just to see what may happen, right? There was plenty of room still on the 15-minute and the 1 hour to put in a higher low. If we just switch to the 15-minute, right? This is about the area that we were in when we sold. Yeah, that's where it was, the overnight high. And you can see that just was setting a hammer 2 down, looking like it might be a higher low. So we stayed in on it, kept to the 5-minute, and we never really got much else from that, right? So we had our runner, we got the higher low on the 15. Soft higher low here on the 5, pushed up, and again rejected off of this basically the same level that we did the double top off of yesterday. So we pushed, we got this kind of lower high situation here, even though this was an inside candle. As soon as we hit this overnight low line or overnight high line again, we went ahead and sold the rest of our position and started to look for puts. Now, another reason why we did this is looking at the QQQ internals, right? If we look over here, we can see the tick open below zero line, pushed up above, but didn't really get up into trend higher zone, just rode the zero line, dropped back below the zero line. Wasn't really doing anything too bullish, basically. The same with the vol QD, right? It was positive. So vol QD is basically money going in versus money going out. So it was positive, but very close to the zero line, right? Nowhere near trend higher zone. Trend higher zone is all the way up here at 400 million. And it was sitting here in between 1 and 200 million. So not much there for the bulls either. And then ADQD or market breadth, QQQ breadth was actually negative, right? It never got positive all day. So we knew that any upside, especially getting those double rejections off of that same level we rejected off of yesterday, and we were going to have a pretty good chance of going back to the downside. So, we were preparing for puts. Once we got this lower high here, as soon as we broke below this 2, we went ahead and entered puts. Obviously came down, made the lower low, lower high, pushed down. We did make a higher low, but we made a lower high. So we were able to stay in that position, came back down, made another lower low, but then reached above this high here. So essentially went to making a higher high. About causing a broadening formation basically at that point, right? Here's the low to low and then high to wherever the high was going to be up above this high we knew is going to create a broadening formation. So now we're looking at, is it going to reject, to this top of the broadening formation? Is it going to treat this area over here? Oops, come on. This area up here is are you going to catch them off guard? Anybody up here is underwater at this point, and any rejections off overnight high keeps them underwater and probably puts some more downside pressure, selling pressure on as they try to get out of that position possibly, and that's what we were looking for. So once it broke above this lower high here, we went ahead and sold a majority of the position, and actually took I think it was. I think it was very small percentage, very, very small percentage loss that we took when we sold the runner, right? We thought maybe if we did get that broadening formation, whenever that high was set, we could come back down here and continue to broaden and test possibly the opening print, but that's not what happened. So did take a small loss on the runner that we left, but overall, still positive day. At that point, kind of stayed out because it just basically looked like sideways action at that point. And if you kind of zoom out a little bit further, just looking at the 15, let's make this bigger for people on their phones. Oops, there we go. So we can see on the 15, we got the bounce, but the rejection off of here was was a lower high, came down and did actually get that test of opening print. Unfortunately, we were out of our position at that point. Even that runner was gone. So we weren't able to capitalize on that. But you can see that overnight opening print level did offer some support. And, if not kind of curling back up at the end of the day with these higher lows here, at the very least, it was flattening out. So, a very inside day, right? We didn't break above previous high a day or below previous low a day. So 2 inside candles actually. If we look at the 4 hour, actually let's take a look at the 1 hour real quick. Let's get a little better chart here. There we go. There we go. So on the 1 hour, we did end up getting a lower high, right, and then lower low. So technically we are in a downtrend on the 1 hour, but very early stages of a downtrend. And again, we finished the day with 2 inside candles on the 1 hour. We take a look at the 4 hour and we can see today, really didn't do much. We had 2 inside candles on the 4 hour. So, for you to have the first inside candle, obviously it shows, indecision on a small scale, right? Like people are trading within a smaller range, but then for the second candle to be an inside, now it's getting in an even tighter range. So got to wait, continue to be patient, wait and see what's going to happen. From the yesterday, we completed the 1 combo 2 down, combo 2 up strat back to magnitude. So, and even poked into the little gap that was there. So, that strat has been run. And at this point, we just need to see, we did make a slight higher high here on the 4 hour, but it is coming from a lower low. So again, we just have another broadening formation here at the bottom of the range that we've been trading in for really since January, right? For a while, a month, about 2-3 weeks ago now, The previous month, we were in this higher zone up here, $60 to $70 range. And we've dropped back down into this lower half of the range that we've been in since January. And, it's just still trying to break back in and have not been able to do that yet, right? We had the drop out and tried to get back in last week, and that was rejected, and we fell down further. So, what happens here? Are we finally going to get back up in here and try and get back to the top of the range at 70? Or are we going to get another rejection and come back and test the bottom of the larger range that we've been trading in? That's really what we're trying to be patient for. Today just showed we need to be even more patient with 2 inside candles, right? Looking at the day. Oops, come on, Thinkorswim. Looking at the day, we didn't do much, right? We in yesterday's video, we said to beware of a possible 2 up, 2 down situation, or even if we did get another 2 up on the day today, watch to make sure it's a solid 2 up and not another inverted hammer, especially if it's a red inverted hammer. But we couldn't even get the 2 up today, just inside and inverted hammer. So the one thing that you can say for the bulls is that it did finish green, so we closed above where we opened. But the 3 2 up, 2 down is still on the board, right? This 2 and this 1 just combined to make a 2 overall in relation to this 3. So if we break to the downside tomorrow, obviously break below today's lows, but then if we break below Tuesday's lows, now we're looking at a possible domino situation where we get back all the way back down to this $44 level and possibly test this gap that we've got down here. Granted, we do have these levels of support that will stand in the way. The 138.2 fib extension of the April low bull flag. We've got last quarter's high. We've got last month's low. We've got the major support and resistance at 50.76 to 46.79. That was the major resistance of 2025, the end of 2025. You can see we had a little bit of action up in here before it fell back below. Then again, a little bit of action up here before it fell back below. So that is going to be, kind of your line in the sand here, the 46.79. It starts getting below there, and then it starts getting tricky again, right? Then we flip the week back red, we flip the quarter and the year back red as well. Now it's full time frame continuity to the downside, firmly showing bears are in control. We've got the gap right here to act as a further magnet. Market makers expected move low is all the way down here at 37.96. So it's the downside is still on the table, right? Today did not do a whole lot to help the bulls case. We can say this is bullish consolidation. It wouldn't be wrong to call that bullish consolidation, but it really remains to be seen tomorrow and the rest of the week whether this is truly bullish consolidation or more of like a topping pattern on a shorter time frame. The past five days to 10 days, right? So that's what we're looking at from the today, from the day time frame and everything below. So again, got to continue to be patient, right? Let's zoom out a little bit more here and take a look at the week. We can see obviously we went 2 down early on the Monday, went 2 down from the open, right? Gap down and then pushed all the way back up. So we're back up in the upper half of last week's price action, which is really, kind of almost the midpoint of the range that we've been in since the beginning of January. So can't be too bearish about that, right? It looks like we could be forming another broadening formation here. Obviously, the high to the high here, we've got this purple line, broadening formation, and then here would be the bottom of the broadening formation. So again, we're coming from a higher high, even though we made a lower low. Again, it's just a broadening formation. There's not really much you can say from it. There's no trend to the upside or trend to the downside. We don't have higher highs followed by higher lows or lower highs followed by lower lows, right? We've just got the higher high and the lower low. So broadening formation, again, it just spells patience, right? What we're really waiting on is the month, right? That's going to be the key here, right? Because there's a couple of things that can happen. Let's get a chart here without the weekly broadening formation. There we go. A couple of things that can happen, right? Obviously, we triggered this 2 up, 2 down, and it ran to STRAT, right? There wasn't a whole lot of magnitude there. But when it ran to STRAT and then went beyond, then it did trigger this 1 combo 2 up, 2 down, right? And the magnitude for that move is all the way down here at the $28 level. So we still have that on the board. The candle is red. It has hammered back up, right? if I can use that phrase. So it is possible, we could flip back green here soon and have a nice solid green hammer here, but we've got more than half of the month left to go. So this could just be a push up for a lower high on the daily or weekly time frame before we get that final flush at the end of the month. And it doesn't have to, we don't have to come all the way down here to 28 this month, right? We can have the continuation of this one combo 2 up, 2 down in next month, right? If April goes 2 down, then that just continues until we reach the STRAT completion down here at 28. So that's what we're kind of waiting for to trigger anything on the higher time frames. The quarter and the year especially, but the week is kind of dependent upon it too, because the week is in that broadening formation. Now, if the week makes, if we push up, have the week like we're having this week, if we close the way that the week is already, and then we get a push up next week for like an inverted hammer 2 up, failed 2 up, something like that, and then we set a lower high and then continue down lower in the following weeks, then this month is going to look more like we're probably going to complete the strat and get down here to 28, right? But if we just continue to push up on the week chart and then go make a higher high to just widen the broadening formation further, then it's looking less likely that that's going to trigger, right? So just kind of waiting on the month, because again, if we look at the quarter, if the month were to go to continue with that one combo 2 up, 2 down, that would bring us down here, especially if it carries into April, right? If the first quarter ends here and the second quarter goes 2 down, now we're looking at a 2 up, 2 down situation. Magnitude of that strat is down here at that $28 level again. So you see how things start to line up, right? But again, we're coming from a higher high, but that higher high was after a lower low. So again, we're just in this broadening formation on the quarter. So not a lot you can really pull from the quarter. We ran this one combo 2 down, combo 2 up to that 70.08, and that's what we have for right now. Same thing with the year. We ran this 2 down, 2 up already, got up to 70.08. So we have this little pullback. Now again, if the month goes one combo 2 up, 2 down, continues going down, and the quarter triggers a 2 up, 2 down, then the year starts to look a lot more ugly, right? This green inverted hammer then flips down into a red inverted hammer, and then the further down we push, the more of a solid red candle that becomes. If you're a bull, you don't really want to see that, but if you're a bear, you definitely want to see that. If you're neutral and someone like us, what happened there? And someone like us, you're kind of almost hoping for the pullback, right? If we finish the year, if we pull back the rest of the year, again, we coming from the higher high, and then say in 2027, we do like a hammer and get a higher low, right? We've got higher high coming from a higher low, so higher low, higher high, higher low. That just could be continuing the trend to the upside. It's going to take a long time for that to play out. So not really much sense talking about that at this point, but that is something that could happen, right? So again, we're really just depending on the or relying on the day and the week charts to start to play out and give us something other than a broadening formation, form some type of trend, so that we can determine whether or not that one combo 2 up, 2 down on the month is really going to kick in, and we're going to see more significant move to the downside. Otherwise, bullish consolidation at worst, and we never know. We could see the next leg to the upside here. With we get the right geopolitical news, right economic data, things of that nature. That could trigger us back to the upside, right? So that's what we've got from a zoomed in to a zoomed out view. Let's zoom back in and take a look at the chart for tomorrow, and look how we will look at how we will attack the beginning of the day, and then on through the day, right? So right now we have on the chart our 4-hour markers, what we call the 4-hour markers. That is previous high a day, overnight high, overnight low, and previous low a day. The last of the 4-hour markers is the opening print, but of course we can't put that on the chart until price actually opens. So, the overnight high, overnight low will probably move overnight. So let's just do it for illustrative purposes. Let's say the overnight high gets up to this 56.91 level, which is that 161.8 fib of the April 7 bull flag, right? So decent area for you to find some type of ceiling overnight. Anyways, let's get the right tool out here. Let's say we open somewhere in between the range tomorrow morning, and we get a push to the upside. Maybe we get a little bit of a rejection off that overnight high and we get a pullback, but then we get some type of higher low at or above opening print. We want to look to get into calls, targeting overnight high and then previous high a day, right? So proven and repeatable strategy, get your opening print. If you get a higher low at or above opening print, get into calls, targeting overnight high, previous high a day. If we open and we push down, maybe maybe we get a bounce off overnight low and we push back up, but ultimately we get some type of lower high at or below opening print, then we want to get into puts. We want to target overnight low and previous low a day. Now, obviously, if we get to those the previous low a day and previous high a day and still moving with momentum, right, then we have further out targets that we will look at, based off of our notes that we have here in a second. But for the proven and repeatable strategy, those are the furthest targets that we have, right? Overnight high, previous high day. If overnight high ends up being above previous high day, then obviously first target is previous high day and second target is overnight high. But those are the targets, all right? Let's go ahead and take a look at the 4-hour chart so that we can look at more of an intraday trade to possibly an overnight swing, right? On the 4-hour chart, remember, we had this one combo 2 down, combo 2 up that triggered yesterday. It triggered at the end of the day on Monday, but it continued yesterday and it reached magnitude, right? So that strat has been run. And again, we're just waiting around on that 4-hour. We had an uptrend on the 1-hour, right, during this push up. But now we've got this lower high. Now we don't quite have a lower low in comparison to this low, but if we're looking at just today's price action, we have this high, low, lower high, lower low. So starting a downtrend on the 1-hour. If we look at things overall, we could look at this like a bull flag, right? There's the flag pull, there's the flag. So if that were to break to the upside, we should push, whatever the distance of this flag pull is, should be the next leg to the upside. So this was 44 to 57, so about $13. So if we've got 57, 13, that'd be 70, right? So it'd take us back up to the top of that range. So definitely plausible if this is that bull flag. Otherwise, we have started a slight downtrend on the 1-hour. It'll be a while before we see that really spill over onto the 4-hour. Just seeing that we've come from a higher high in this case, right? Here was this high. We went just slightly higher. So lower low to higher high, broadening formation on the 4-hour, slight downtrend on the 1-hour. We just got to, again, be patient, see where it goes. Keep your eye on that 15. That should be a pretty good indicator to, lead you into what the 1-hour should be. And then, we can go from there. The 1-hour should really be, really be your trigger if you're looking at more of a day trade or overnight swing than like the 5-minute should, right? So, keep an eye on that 1-hour and see if that trend doesn't reverse, and then continue to push us to the upside. If we do go to the upside, we've got this 1-1 that we've got to break out of first. So obviously got to try and get above previous high a day. Once we do, kind of got some a couple of levels of resistance that are right here, and kind of the reason why we haven't broken through this gap yet, right? We've got market makers expected move high right here at 57.75. We got the month flip right here at 58.15. So get above that level, the month flips from red to green. But we do have this weekly broadening formation right here as well. So got to break through that resistance right here. If we do, should see 60.85, possibly 62.82. But again, got to wait for those triggers. And then if they do trigger, then go ahead and act on them. If we go to the downside, we got kind of a domino effect of 2 up, 2 down, combo 2 up, 2 down. That could take effect to just bring us right back down to here to this $45 level. Will it happen in one day? if we get the right geopolitical news, the right, economic data, it's very likely that it could happen. We've had big days before, red or green. So SOXL is a high beta. That's part of why we trade it. So we could get all the way down there, but there are levels of support on the way down that we would have to look out for. Right on the day, excuse me. Again, we want to try and break out of this. Let's get something better here. There we go. We want to kind of try and break out and get a solid 2 up, right? We don't want another inverted hammer 2 up, just showing, weakness, bull's weakness as it gets higher, right? Because that could just continue to further indicate that, we could continue to pull back, right? We want something nice and solid green candle, not a lot of wick on top. Even a hammer candle would be nice as well. Get a little gap up, gap close, and what we call a gap fill reversal. So if we get a gap up, come back down, fill that gap, and then bounce, leaving a wick down here, and then a hammer, solid candle above that, that would be ideal for bulls. But right now we are running the risk of just triggering this 2-1, 2 down reversal, which then could roll into triggering this 3 combo 2 up, 2 down to bring us back down to that $45 level. So I wish, we don't have a trend, so I can't say we should be going this way, right? But this is why we don't make predictions on this channel. This is why we put triggers and targets on both ends of the equation, right? We don't have to be right ahead of time. We don't have to guess and say, I think it's going to go this way, and then try and jump in off of our guess, right? We just wait for the right triggers, whether it's to the upside or downside, and we jump in from there, right? Let's go to our notes. We've been looking at the charts here for quite a while, right? So this is for Thursday, March 12th. There will be 204 trading days left in 2026. And the close price on Thursday, actually, I did not write the close price, 56.09. 56.09 was the close price on Wednesday, March 11th. We know that the week is green. It goes red at 45.51, so not a real threat of that happening at this particular time. But we do know that the month is red, and we've got to get back above that 58.15 level in order to turn the month green again. The reason why we're looking for that is because the week, the quarter, and the year are all green. So we want that full time frame continuity. We don't want that conflict of time of continuity there, right? So that the conflict usually indicates a little bit more of choppy price action, and that's basically what we've got. Whether you want to say a broadening formation is choppy price action, it doesn't have a trend, right? That's essentially what it boils down to, and that's what's happening. So we know that the market maker's expected move for this week was plus or minus $9.93 from the close on last Friday, which gave us an expected range of 57.82 to 37.69. Again, you can see we're pressed up towards that top part of that range, and that 57.82 we've rejected 2 days off of that level now, both yesterday and today. So market makers are right 70% of the time, so just keep that in mind. We do know we still have that small gap above that could act as a magnet to pull us up, but we do have a gap below that's not too far below, back down to that $44 range, basically Monday's low. So we could get back down there real easily. That could act as a magnet on price, and if we get down to that one, then we've got further gaps to the downside that could continue to act as magnets on price. We know that from a scalping perspective, we're looking for scalping at early morning. We're looking for higher lows at or above opening print to get into calls, or we're looking for lower highs at or below opening print to get into puts. We talked about on the 4-hour time frame, we coming from that double inside day. So if we get price action to the downside, it gives us that 2-1-1 2 down. The first trigger is 55.48. That's the bottom of this one, and 55.35 would take us to the bottom of this one, right? So got to kind of watch there. Even if it goes below 55.48, make sure it really gets below that 55.35 before jumping in too heavy. The magnitude of that move is 53.85, so decent sized move to the downside. But if we do reach that level and continue with some more momentum, we've got the extended targets listed here for you as well. If we go to the upside, then we trigger at 56.80 is the high of this, the second one 4-hour candle from today's price action, and 57.74 is the high of this one. So a little bit more magnitude to work with here. You could even play that as a move. It's in and of itself, buy a call once you go above 56.80 and look to exit at 57.74. That could be a decent scalp for you as well. But once you get above that 57.74, the magnitude of the move is quite small, right? 57.78 is the rest of that move. So if we do get there and we've got some more momentum, we've got the extended targets here for you as well. We talked about on the day, if we go to the downside, that triggers that 212 down at 55.35, magnitude of 53.36. So that move right there is decent enough size. But if we do get to that 53.36 and get below it, then we trigger that 3 combo 2 up, 2 down. And the magnitude of that move is all the way down there at that 44.53. Again, we talked about those levels of support that we have in between, 53.36 and 44.53. So we did list them here. Those are levels that, price could either bounce from or just go sideways, right? We don't have to get all the way down here to that 44.53 in one day if we are going to get there, right? We've still got a couple of days left in the week, so it could be Friday before we reach it. And one of these levels is where we kind of sit, where we're sitting at the end of the day tomorrow, right? If we go to the upside, we got that 212 up trigger at 57.74. Magnitude isn't very, very high, right? 4 cents, 57.78. So it shouldn't be hard to have momentum hitting 57.78 from 57.74. But if we do, then we've got some extended targets listed out here for you as well. On the week, we talked about previously, we did trigger the 2 down, 2 down continuation. That's why this is underlined, but it's not in bold, right? It's not in force. We're not below that 46.80 level. So, we're looking for the green 3. Still got a ways to go before we get that green 3 or bullish engulfing candle. 56.09 to 62.82 is still a decent move. It could be done by the end of the week. If it is going to happen. So just keep in mind that could happen. But right now we're just kind of sitting as a it's not even a hammer, right? It's just a solid green candle because we opened so low. But just know it did trigger, so we could pull back and re-trigger that. On the month, we did trigger the 2 up, 2 down, and we reached magnitude at 45.08. Actually went a little bit below it, so we did trigger the 1 combo 2 up, 2 down. Let me go ahead and underline that. I don't know why it's not underlined. It was triggered, but again, we're not in force, right? We're not below that 45.08 level. So we would have to get back down to that level to re-trigger this 1 combo 2 up, 2 down, which does have a magnitude all the way down at 28.12. So bulls obviously don't want to see that. And, because it is such a big move, we do have these levels of support in between that price could either go sideways or bounce from. So just keep that in mind. Again, the 1, 2 up, 2 down doesn't have to complete in 1 month. We could hit, 43.80, 39.44 and just hang out there in that general area through the end of the month. And then next month go 2 down to continue this to get to that 28.12, right? Just keep that in mind. To go green 3 or bullish engulfing on the month, got to get up to 72.36. So we still got a lot of work to do that. We'll talk about it more if we start approaching it. But as of right now, we're not there. Still got 2/3 of the month left to trade, so it is a possibility. So we'll keep that on the charts. And then we talked about on the quarter, we already ran the STRAT for the 1 combo 2 down, combo 2 up, reached magnitude at 70.08. Same with the year, we did the 2 down, 2 up, reached magnitude at 70.08. So just trying to get back up to that 70.08 level, and then ultimately that 74.21, which is the all-time high, and then start getting into the blue sky territories, right? But yeah, that's what we've got for today's triggers and targets for everything from a scalping or early morning entry perspective all the way up through the 1-year chart. We try to jam in as much information as possible without taking up too much of your time. So we hope you did enjoy the video. If you did enjoy the video, a thumbs up goes a long way. We do appreciate those who continue to tune in, who continue to give us that thumbs up. It just helps the channel grow, helps spread this information that we're trying to provide to more people, right? Obviously, if we were in it for the money, we would be charging a membership or something like that. That's not what we're in it for. We just want to kind of try and do our part for the community, right? For the trading community, and take our years of experience and proven methods to try and help some other folks, right? But yeah, that's what we're here for. So again, a thumbs up goes a long way. And if you think the video could help someone else, go ahead and give it a share. But we'll go ahead and wrap the video up today like we do every day. If you're watching this Wednesday night, we hope you get some good rest tonight. Wake up refreshed tomorrow morning. If you're watching this Thursday morning or Thursday during the day, we hope you had some good rest last night and woke up feeling refreshed this morning. And we look forward to getting out there and trading with you.